a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Nvidia, arguably the most important company in the world now, and some ETFs that you could use to capitalize on Nvidia's earnings. So the company is reporting on Wednesday after market close, and its earnings could provide the next big catalyst for the market. So let me share my screen and talk about Nvidia's earnings. This is what we'll be talking about today. We'll discuss analyst estimates and what you should be watching in those earnings. And then we will talk about valuation. Is the stock expensive? And the most important question for investors, whether Nvidia's chip dominance can continue going forward, or is there a bear case for the stock? And then we will talk about these single stock ETFs that investors could use if they want. So this is what analyst estimates are. Analysts are expecting 63 cents in EPS and 28.2 billion in revenue. So let's go to Nvidia's quote page on Zacks.com. And if you go to detailed estimates page, you can see those sales estimates up more than 100%, 109% year over year. And earnings, 63 cents, I mentioned, up 133% year over year. Those are some amazing numbers. And Nvidia, if you look at the price consensus and EPS surprise chart, the company has been delivering those amazing revenue and earnings numbers. Just look at the price chart and earnings chart over there, and it has been beating estimates and raising guidance for the past 6 quarters consistently. Now, the focus will be on data center revenues. So this is from NVIDIA's website, NVIDIA and investor presentation. So data center revenue, where all AI magic happens, that was up 427% year over year in the last quarter, first quarter of their fiscal year when they reported. So analysts and traders, they will be looking at the guidance and particularly data center revenue and guidance. These are called, data centers are called AI factories by NVIDIA CEO Jensen Huang. He says that data comes in and intelligence comes out of these data center factories. And this is indicative of, this is going to be indicative of whether AI bonanza can continue. Now, the largest tech companies, Microsoft, Amazon, Alphabet, and Meta, these are the largest clients of NVIDIA, and they account for more than 40% of data center revenues. Now, combined capital spending by these 4 tech giants in the first half, the first 2 quarters, was over $100 billion. And they are on track to spend close to $200 billion this year. And a lot of that, not all, but a lot of that will be spent on AI infrastructure build out, including data centers where NVIDIA's chips will be used. So expectations are sky high, and these companies, the tech giants, are not slowing down. They continue to spend a lot on those chips, and that is why data center revenue could be another a big beat, and the revenue will be washed. Now, there were some reports of delays in shipment of their next generation Blackwell chips, so that will also be watched by traders. Now, let's look at valuation. So shares are up about 165% this year, and after more than 200% last year. But the stock is down about 10% from its record high. That global sell-off that impacted Nvidia too. They have rebounded very impressively over the past 2 weeks, up about almost 30%, but still down 10% from record high. Looking at valuation, despite this surge, the price surge, valuation still looks reasonable because earnings have been rising. Earnings and earnings estimates have been rising faster than its share price. So the stock is currently trading at 48 times its forward earnings. In the past 5 years, it has traded as high as 106 times, and the median is about 51 times. Now, the most important question for investors, whether the AI chip dominance can continue. So, NVIDIA currently controls about 80% of the market for cutting-edge AI chips. But CEO Jensen Huang frequently says that it is not a chip company. What they offer is a full stack accelerated computing platform. And in tech language, this is often called a walled garden. So the ecosystem, their AI ecosystem includes best-in-class hardware, software, and networking technology. So for any competition to emerge, remember they control more than 80%, and there is no competition, relevant competition as of now. So for any competitor, they will have to first develop best-in-class hardware, software, and networking technology, and then also gain access to a large share of Taiwan Semiconductors' advanced manufacturing capabilities. NVIDIA already has access to those manufacturing capabilities. No other chip company like AMD has that kind of access. So you must have also heard that one big risk for NVIDIA is if China invades Taiwan. So my view is that China also depends on Taiwan Semi for its advanced chips. So why would they want to disrupt that arrangement? So by China, I see that as more of saber rattling. And then once spending on generative AI slows down, there are many other areas where NVIDIA's cutting edge processors are used. Sovereign AI, automotive, including self-driving cars, healthcare, omniverse. So I don't see any slowing down in the demand for NVIDIA's chips and the dominance of these chips in the market. Now let's take a look at these ETFs, single stock ETFs. So because of NVIDIA's surge, many investors have poured money into these single stock ETFs that aim to double its daily return. So this Granite shares 2x NVIDIA ETF, which the ticker symbol is NVDL. This has $5.9 billion in AUM now. They started the year with just $200 billion in AUM. So amazing growth in this ETF. Then T-Rex and Direction also offer 2x ETFs. NVDX has 732 million and NVDU has 607 million in assets. These are all expensive and these are daily. You should focus on the term daily. So these are not meant for long-term buy and hold, but I think these can be effectively used as short-term tactical trading tools before and after earnings, because NVIDIA is a high beta stock. We could see a lot of volatility. Just about 2-3 weeks back, the stock had plunged. and then rebounded. So it's a volatile stocks, and investors do get opportunities to buy the dips. And for buying those dips for short-term trading, you can use ETFs like this. But remember, these are not buy and hold instruments. And because they are not buy and hold instruments, you don't need to focus on expense ratio. There's some difference in the expense ratios, but best to go with the one which has highest, best liquidity. And if you believe that Nvidia is too expensive now, its run is over, for those investors who want to book some profits, there are some short ETFs also available. So by Greenwich shares, you have NVD with 70 million in assets. NVDA has 57 million, and the direction product NVDA that has about 23 million in assets. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to all our videos and our YouTube video channel so that you do not miss anything. And I will see you next week.